Now look at note number 2. It says an amount of 400,000 owing by a customer was written off. So that is an amount that was written off. That is to say that is a bad debt. Bad debt written off. A bad debt written off reduces the balance on the sales ledger control account, and therefore we credit bad debt written off 400,000. 400,000 bad debt written off. This reduces the balance on the sales ledger control account. You understand? Laura says from the second information, amounts owing by customers. How much is the amount? 3 million. 3 million. Amounts owing. 3 million. She says amounts owing of 3 million. Is that true? Amounts owing. That is which note is that? Amounts owing? Laura, which note? Which information is that? From the second information, that is on is it additional information number 2? Additional information number 2 reads, as at 31st December 2023, as at 31st December 2023, the amounts owing to suppliers amounted to 1.5 million, and the amount owing by customers amounted to 3.1 million. Amount owing by customers amounted to 3.1 million. That is true. So that is to say that there is a balance carried down. That is balance carried down because it is at the end of the accounting period. Balance carried down 3.1 million. That is true. I see candidates, the examiner can use what we call synonyms. Instead of telling you balance carried down was this, the examiner says the amount owing as at 31st December was 3.1. So that is a balance carried down at the end. And you see, I told you that at the beginning there was no balance. As at 1st January 2023, there was no balance brought down because the business, that is the day the business began. There were no sales that were made to the customers and they had not paid. So this is the amount that the business sold to the customers, and by the end of that period, 3.100,000 had not yet been paid. So that is credited. Do you have any other item? Do you have any other item? Someone else? That was good, Laura. Candidates, is not hard. You just read through the question and look for any information relating to sales and debtors. All right? Because you want to calculate the amount of sales that were made during that period. So you just go through the whole information that you are given, looking for information that is related to sales. And that information can be obtained from even the bank statement. Look at the bank statement. After the capital introduced, we have balance of cash received from customers. Balance of cash received from customers. So what does that tell you? Tells you that this business, partnership business, sold to customers on credit, then these debtors paid. So the business received 25,400,000. You following? Okay. So the 25,400,000, do we debit it on this account or do we credit? What do you think? What do you think? Someone says, Laura says we debit. So the answer here is we credit, we don't debit. This is cash received from customers. Cash received from customers is 25,400. 25. This is 25,400. I have to put 3 zeros here. All of you said we debit, but I say we credit. Why do we credit? And why do you debit? I know why you debited. It's because you are confusing the sales ledger control account with sales account. And it's good you are making that mistake now, before your exams. You are confusing the sales ledger control account with the sales account. And even if, that's what you are doing, because when preparing ledgers, when you make sales to customers, you have, when you sell on credit, you debit debtors account and credit sales account. You say debtor A, you credit. I want you to pay attention because you've made a big mistake here. My intuition tells me you are confusing sales account with sales ledger control account. They are not the same. When you sell on credit to a debtor, you credit sales account, debit debtors account. When this debtor pays, what happens? You debit the bank account and credit debtors account. Now, candidates, a sales ledger account is also known as debtors ledger control account or accounts receivable control account. All right? It is also known as debtors control account. So this is like, let me say it is like a debtors control account. It is like, I'm using like to help you understand, it is like the debtors control account. It is like debtors. And even if it is like debtors, I don't know why you said we debit, because even if it was to be debtors, when you receive cash from debtors, you will still credit, reduce the balance. You understand? So the cash received from customers is credited to the sales ledger control account. Do you understand? Can we proceed? Yes. So the balancing figure on this account is what we are looking for. This is the balancing figure. How much is it? Give me this total. That is the sales figure. 31,153. 31,153. 31,153. 000. 3 million? Or is it 31 million? 31,153,000. That is the sales. 31,153,000. Make sure you are getting the same figure. That is sales. Then from these sales, we deduct cost of sales. From these sales, we deduct the cost of sales. And how do you calculate cost of sales? We're going to take the opening stock, which we do not have. There is no opening stock. This business began on 1st January. There is no opening stock. Then we add purchases, which again we do not have. This is working 1. We need a working for purchases. Purchases. So we're going to have a purchases ledger control account. Working 3. Purchases ledger control account, or accounts payable control account, or creditors ledger control account. So if there is any balance here, which there is no balance, we'll either debit or credit. There are no opening balances, but without check from the information provided for any information on purchases. Purchases. Let's look at note number 2. There is information on purchases. That is discount received. What else do you think should be included in this account other than discount received? Amounts owing to suppliers. Amounts, Laura says amounts owing to suppliers. Amounts owing to suppliers. That is true. What else? Do we debit or do we credit amounts owing to suppliers? So here, first of all, there is discount received. Note number 2, discount received. That is not number 1. Discount allowed to customers, while discount received from customers 110,000. 110,000. Then there is the amounts owing. Amounts owing, not number 2. As at 31st December 2023, the amounts owing to suppliers amounted to 1.5 million. That is a balance at the end here. Balance carried down of the balance carried down is 1.5 million. 1.5 million. 1.5 million. Amounts owing. Do you have any other information? Yes. Look at the summary of the bank statements. Anyone? Look at the summary on the bank statements. The 5th last item there is purchase of inventory. That is an amount that ought to be reflected in the purchases ledger account. Bank. This is bank. So bank account is credited, purchases ledger debited. 19,800. The balancing here will be the purchases, balancing figure, purchases. How much is the purchases? 21,410. 21,410. That is purchases. 21,410. Purchases 21,410. 21,410. So we are to deduct the closing inventory, and if there is any other transaction that reduced the inventory, like drawings. Do you have drawings? Did any partner withdraw any stock from the business? Do you have any drawings? Yes, note number 7 says that the partners had taken goods for their domestic use. Those are drawings, should be deducted here. Drawings. The total is 250. Deduct. Then deduct the closing inventory. The closing inventory, I read it somewhere. The closing inventory, note number 4, 2410. Inventory is 2,410. Deduct. The balance here is the cost of sales. Give me the cost of sales. We deduct it from the sales. We'll have the gross profit. So what is the cost of sales? 18,750. Then deduct the cost of sales from sales. What is the gross profit? What is the gross profit? 12,403. 12,403. 12,403. Then we add any other income. We add any other income. Any other income, like the discount received. That is an income. Discount received. Discount received is an income. Discount received from suppliers amounted to 110. 110. Add it. So what is the total income? The total income before we deduct expenses. Total income. Without the calculator, this is 12,513. Is it not? Then expenses. Expenses. We go through the question and pick expenses. And one way to pick expenses is to check the additional information. Additional information, number 1, we have the first expense there. That is discount allowed is an expense. Discount allowed is an expense. Discount allowed 245. Then note number 2, those amounts owing, there is a bad debt written off in note number 2. Bad debt written off 400. In note number 3, we have another expense there that needs to be adjusted. Rates and insurance prepaid. Rates and insurance prepaid amounted to 50,000 shillings and 10,000 shillings respectively. So that means the amount in relation to rates is 50. So these are prepaid. Prepaid. That is to mean paid in advance. When you have prepayments at the end of the accounting period, you deduct from the amounts that were actually paid. So out of the amounts, the rates that were paid during this year, out of the rates that were paid during the year, 50,000 does not relate to the current period but to the next period. So we check for the amounts for rates, and you have it in the receipts and payments. Rates, we may have a working for rates. Let me just do a working for rates. Rates account. When the rates were paid in the receipts and payments account, bank account is credited and rates debited. So here we have bank. Bank is debited with the total amount of 400. Okay. But at the end of the accounting period, there is a balance of 50. This balance we credit. Balance carried down 50. So the balancing figure here is what should be reflected in the profit and loss account. And this is 350. The same applies to insurance. How much was paid? Insurance expenses is 110. So we have a working number 5, insurance account, bank. The amount paid there is 110. Then there is a balance at the end. This balance is how much? 10,000. So the balancing figure on this account is what is taken to the profit and loss account, and the balance is 100. So these are workings. Rates, working for. The amount there is 350. Insurance, working 5, 100. These are expenses that I'm picking from the additional information. Additional information, that is additional information number 3. Then there is additional information number 5, which says that the go down had been occupied since 1st January at an annual rent of 1 million. Had been occupied. So the annual rent is 1 million. Okay, is 1 million. Then you have depreciation. Depreciation will need a working for depreciation on motor vehicle. There is depreciation on equipment and furniture. And we are told that the depreciation rate is on straight line basis. Motor vehicle 20%. So we'll take, this is depreciation. Motor vehicle is 20% times the cost of motor vehicle. That is payments. Look at payments. Purchase of motor vehicles is 2 million. Payments, correct? It's 2 million. How much is it? Then we have, apart from motor vehicles that were purchased from the payments there, we have 2 million. Equipment. The rate for equipment is 10%. 10% times the cost of equipment. Cost of equipment is 5 million. 5 million. So 20% of 2 million is 40,000, is it not? Then 10% of 5 million, how much is it? 5 million is 50. Is it 400 or 50? Give me the depreciation for motor vehicles. 400,000, 500,000. 400,000, 500,000. That is depreciation. We have done discounts, bad debts, we have done the rates, we have done insurance, we've indicated the go down rent, we have the depreciation on motor vehicles, we have the depreciation on equipment, depreciation on what else was bought? Furniture. Furniture. Furniture again is 10%. Furniture was to be depreciation at 10%, and the amount there is 750. 7.5 million. 750. This is 750,000. That is 10% of that, which is equal to 75. 75. That is 75. That is furniture. This is equipment and furniture. 75. Depreciation on furniture is 10% of 750. Okay. Any other expense you can pick from the information? Expense. From the information provided. Expense. Yeah. You realize that I first of all went to the additional information to pick the expenses, but there are also other expenses within the bank statements, like the wages. We have go down rent, then we have wages, 3544. That is bank. 3544. Do you see that? Do you have any other information on wages apart from the one that is shown in the bank statements? Yes, look at the following cash payments were made before banking. Wages 296. That is cash. There are wages that were paid out of cash of 296. Cash. Candidates, you see how easy accounting is. All you need are eyes, if you can see. This one I've picked it from the cash payments. This is money that was received. Then before it was banked, there were wages that were made. There are wages that were paid through the bank and wages that were paid by cash. This total will be the amount for wages. So P and L, how much is it? What is the total wages? Total wages. Give me the total wages. 3840. So 3840. Laura says 3840. 3840. Working number 7. Wages. Working 7. 3840. Then I've seen Kevin says 3840. There's someone who said gave us something. Mari. Before Mari, we have Laura, wages, salary to sales team. Mari says repairs and maintenance. Repairs and maintenance. So repairs and maintenance is how much? Repairs and maintenance from summary of bank statements of 125. That does not need any working. Repairs and maintenance. Repairs and maintenance. 125. 125. What else? What else do we need? Motor vehicle operating expenses. Working 8. Motor vehicle operating expenses. Motor vehicle operating expenses account. Can see there we have bank from the bank statements. We have bank. Motor vehicle operating expenses paid through the bank, 375. Do we have payments that were made out of the bank? Yes. Cash payments. The first item there, Under cash payments, you have 258, cash 258. This total is what we take to the profit and loss account. How much is it? How much is the motor vehicle operating expenses? Motor vehicle operating expenses. One just says 370. Is it 373? Motor vehicle operating expenses is 258. And the one for the bank is 373. Bank is 373. This is 373. 373. So what is the total? 373 is for bank. You add 258. The total is 631. 631. Motor vehicle operating expenses. Motor vehicle operating expenses 631. 631. 631. Do we have any other expense? Rent. We had rent expense. Let me check rent. Do we have rent? Yes. We have rent there. We have the rent. How much is the rent? Have we omitted any other expense? There are no general expenses. Yeah, general expenses from the cash payments. Look at the cash payments. Look at the cash payments. We have general expenses. General expenses. General expenses of 50. So give me the total expenditure. Give me the total expenditure. Deduct the total expenditure from the total income. That will be the net profit before. Yes, general administrative expenses. Salary to sales team. Someone says salary to sales team. Oh, we have salary to sales team 2.4. Yes, 2.4. Look at the payments in the bank statements. We have salary to sales team. Salary to sales team. Add salary to sales team. Salary to sales team of 2.4 million. Then give me the total. And that tells you candidates in the exam, make sure you tick the items that you recorded. Make sure you go through the way we are doing. Ensure that you have all the expenses. Tick them so that you don't omit any. Because if you omit any expense, then the net profit will be wrong. The appropriation will also be wrong. So what is the total expenditure? Total expenditure. Total expenditure. Joel says 10,116. 10,116. 10,116. Deduct this expenditure from the total income. Give me the net profit. Give me the net profit. Net profit. What will be the net profit? Net profit. Laura is asking a question. From the rent, why is the go down rent of 750 not included? It's a good question. That's why I was asking, did we have a working for rent? Working number 9, rent account. She's asking, why was the go down of rent of 750 not included? We included the rent. Additional information number 5. The go down had been occupied since 1st January 2023 at an annual rent of 1 million. So that is the annual rent. But out of this annual rent during this year, the information we have from the bank is that the go down rent, was it from the bank? 750. Yes, the go down rent from the bank, when the rent was paid, bank was credited as we have seen here, then rent debited, bank 750. Pay attention, please. The annual rent is 1 million. Only 750 has been paid. What does that mean? That means that 250 has not been paid. So 250 has not been paid. 250 is in arrears. 250,000 shillings is due. This 250 is due. This is a balance carried down at the end. So only 750 was paid. 250 was not paid. But when recording expenses, you have to indicate the expenses that ought to be paid, whether they've been paid or not. That's why when you balance off this account, you still have the 1 million. You still have the 1 million. This is 1 million. So that's why, Laura, we did not record 750, but 1 million. In accounting, when recording expenses for the year, you record expenses for the year, whether they've been paid or not, for that year. And if the company has paid in excess, we deduct the excess. That is what happened for rates. During this year, the company paid in advance. Look at this. 400 is not for the year. It is for the year plus another month next year. So that's why we deducted 50. So 400 was paid, but what we are showing in the profit and loss account is less than the 400 because we have deducted the 50 that is in relation to the next year, next accounting period. So 350. So you record what ought to be recorded. So that is why, to answer your question, we did not record 750 but 1 million. That is to say that 250 has not been paid. That is what we refer to as rent in arrears, rent due, rent unpaid. Is that clear? Give me the net profit. 2397. 2397. That is the net profit. So you have to prepare profit statement of profit and loss appropriation account. So we have to appropriate appropriations. When partnership come together, the objective is to make profit and then share the profit, or if there are losses, the losses are shared. These partners made profit, and these profits are shared depending on the agreement. What did they agree? Look at the information. Melody and Olivia commenced a partnership business on 1st January 2023, sharing profits or loss in the ratio 2:1 after allowing interest on capital. After allowing interest on capital. So they are only going to share these profits after allowing interest on capital. So first of all, we pay them interest on capital. So how much did Melody receive? Melody. The rate is 2:1. So Melody receives 2/3. Then Olivia 1/3 times the capital that they injected in the business. Capital introduced, Melody is 7 million. 7 million. Then Olivia times 4 million. So how much is that? Melody, interest on capital. The 2/3 is not, it is not interest on capital, but the 2/3 is profit. The interest on capital introduce the partners at the rate of 10%. This ought to be 10%. This is 10%, not 1/3. Just 10%. It's 10%. The interest on capital is 10%. 10%. So 10% of 70 of 7 million. Is it not 70? Is this one not 40,000 or 700? Interest on capital. 10%? Yes, interest on capital is 10%, 10%. Then if there is any one of them that is paid salary, we pay them their salary. We pay them their salary. We read on the second sentence, Olivia was to receive a salary of 80,000 per month. Salary. Olivia was to receive salary of 80,000 per month. Starting from 1st February. So the business started on 1st January. So Olivia was not paid salary in January, but she started receiving salary from February 1st. So that is 11 months. So it is 80,000 times 11 months. That will be Olivia's salary. How much is it? This without a calculator, is it not 880? Is it not 880? 880. Do you understand? It's 11 months because he started receiving salary in February. I'm not seeing your answers, please. Out of the profit, we have paid salary, we have paid interest on capital, then anything that remains should go to profit. Should go to the profit. Profit. So this, give me this total, deduct it from that net profit. Then we share it. Then we share. Profit share. And we've seen that Melody receives 2/3 times what you receive. The profit here, profit, then Olivia 1/3 times the profit. How much is it? So this is 11, 19, 1990, 1980. Is it? Is that true? So what is the net profit? 417. This 417. So this is times 417 times 417. Can do that. We deduct that, deduct that. nil. So how much does Melody receive? Dowdy says 278 and 30 and 278 and 139. 278 139. 278 139. 417 nil. This question we are required to prepare the statement of profit and loss which you have done,